Pros and cons of a reverse mortgage. There are pros and cons with a reverse mortgage, but let's tackle the myths that surround reverse mortgages, and then we'll get to the pros and cons of a reverse mortgage product. There are myths, stories, and misinformation on the internet about many things, but our topic of concern today are the myths of the reverse mortgage product in Canada. The first myth is the bank owns your home, which is simply not true. If someone said to you when you get a regular mortgage that the bank will own your home, you would probably scoff at them and laugh because it's just not true. We all know it. The same goes for the reverse mortgage. A reverse mortgage is securitized against your property and the title remains in your name at all times. The second myth is the unpaid interest will erase the many years of equity that has built up in the property. Keeping in mind the maximum loan to value on a reverse mortgage is 55% of the appraised value, which is very conservative lending. This ensures that you will have access to the cash you want and the security you need. The property will never drop below the amount of the reverse mortgage. The next myth is the reverse mortgage is a financing solution of last resort. This myth has been circulating for decades. With more seniors retiring each year, enjoying more longevity than previous generations, they are also retiring with less funds to maintain their pre-retirement lifestyle. Therefore, a reverse mortgage is a viable option to be considered in the overall plan of retirement. Now that we have busted the myths, let's look at the pros of a reverse mortgage. First of all, you need to be 55 years of age and be a Canadian homeowner. The reverse mortgage product enables you to convert up to 55% of your home's value into tax-free cash. Yes, let me repeat that. Tax-free cash. If the sound of tax-free cash doesn't get you excited, you may as well sign off now and go for a walk because you won't be interested in sticking with me on this topic. You maintain ownership of your home and there are no monthly mortgage payments required. The loan is repaid when you choose to move or sell. The funds of a reverse mortgage can be used for whatever needs you require. You can take out your tax-free cash as a lump sum payment, or you can have it deposited into your account on a monthly basis. You may want to renovate your home, take a dream vacation, assist family members with their financial needs, top up your own pension monthly income. Whatever it is, the choice is yours. Let's talk about the downside of a reverse mortgage. If you're looking at a reverse mortgage as a financing option and you are not 55 years of age or your spouse is not 55 years of age, you will not be eligible at this time to pursue a reverse mortgage. If you don't own a home, you will not be able to qualify for a reverse mortgage. The older you are, the more equity you will receive from your reverse mortgage. The sweet spot age for a reverse mortgage is approximately 72 years of age or older. The older you are, the more tax-free cash you will receive with a reverse mortgage. You may view having to maintain the property in satisfactory condition to be a con. This is required to maintain the increased value of your property over time. Having a reverse mortgage doesn't mean you can neglect taking care of your home. You are also responsible for paying your property taxes and condo fees if applicable. You are also responsible to carry the proper insurance on your home. At this point, your interest is probably piqued about a reverse mortgage, and you may be asking yourself, what are the next steps to find out if this is a financing solution for you? You may have a traditional mortgage currently on your home, or you may even have a line of credit on your home, which is essentially a loan securitized against your home with a monthly interest payment obligation. In some cases, a home equity line of credit may be the perfect solution for you and your spouse. A line of credit is also a demand loan, which can be called in for repayment within 30 days if you or your spouse passes away. Imagine, while grieving the loss of your spouse, the bank calls you and tells you your line of credit must be paid back immediately. As I mentioned earlier, a reverse mortgage is never called in for repayment even if you or your spouse passes away. It is only to be repaid when you move or sell your home. How much equity is needed to get a reverse mortgage? The value of your home is determined by an appraiser. From this appraised value, your home equity is derived by subtracting any outstanding secured debts against the home, such as another mortgage or a line of credit. Your age, marital status, and location of your home are taken into consideration to give you a final number. If you check the boxes of being a Canadian homeowner, 55 years of age, you have equity in your home, and your home is a minimum of $150,000 in value, you would be eligible for a reverse mortgage. You can have a reverse mortgage take over a traditional mortgage, or if your property is free and clear, you can take a reverse mortgage out, and you can also use a reverse mortgage for a new purchase. Doesn't a reverse mortgage just keep getting better and better? You can always switch from a reverse mortgage to a traditional mortgage if you wish. There may be a penalty to do so, but the option is there for you if necessary. If you would like more information and a free consultation with no commitment from you, please contact me today to get you started into enjoying life stress-free. Isn't it about time your house started paying you back?